Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Monday, June 28th, 2021. What we're going to do is start out with a brief update on the broad markets and then roll into a few highlighted trade ideas. Those are some of the trade ideas I think have the best risk reward opportunities right now. Broad markets really more the same. This is a multi-month grind for the S&P 500. Yes, it is up at or near new highs, but it's also in the top of this pretty much this sideways range. You can see that each marginal new high, in other words, this one back here, let me grab my tool, each marginal new high gets met with selling, and it's not a breakout. You do have somewhat of a trading range there. And you know, it would be bullish to see a breakout if it was impulsive. Usually when something consolidates for many months like that, you get in a range. Breakout will determine the next tradable trend, whether that break is to the upside or downside. Based on these divergences, which continue to build, the momentum indicators rolling over, moving averages flattening out. I favor this scenario here. We zoom back in, nothing to update since last week. Every day since last Tuesday, we've been back testing this purple secondary trend line. And you can see, look at this price compression getting really tight. Usually when prices compress like this, from that comes a pretty big move or a decent move. But right now, nothing new to report on this daily chart. I'm going to get to the futures in just a second. We'll look at the 60-minute charts, but let me just wrap up here with the daily charts of the ETFs for you. This is QQQ. Now, QQQ, as you recall, has taken the baton, so to speak, from the financials and industrials. For many months, QQQ was lagging, kind of take a step back, turn off all the lines. I've talked about this quite a bit lately. I'm sure you're getting tired of it, but this is mostly sideways trading here to a slightly higher grind. But then we did just recently, when the financials and industrials started to correct, we saw money rotate out of those and into technology stocks, and that's why QQQ has risen. QQQ is very tech heavy. Right now, that's the trend line I would look at here on the daily chart, the minor uptrend line, but nothing has changed. In fact, I'm going to take this trend line here away, this divergence line, excuse me, and just extend this. Take that one away and just extend these yellow lines. Those show the divergences have been building. When you see such long divergences on the daily chart, you can really just zoom on over the weekly, and then you can see them even a little more clearly sometimes. But that's what we're looking at. So we continue to move up. I always say divergences are not a sell signal, merely an indication that a trend reversal is likely. And so sell signals come on break of bearish chart patterns or support levels, trend lines, price support, etc. Right now, we don't have those on the Qs or SPY. Look at IWM. IWM had been leading. The small caps were outperforming the large caps for a while, but they've also just turned sideways now for the last few months. Again, you turn off all those lines. Just look at this fairly tight trading range here, and that's what you have. So momentum is stalled out, and again, you can look at it glass half full, glass half empty, and you should. You should look at everything on the charts. But what I see, and the reason I favor downside resolution of this trading range are these divergences that have been building, just like we had divergences back here. That's the last time we had some nice divergences. We even had some divergences here. I'd be remiss not to point those out. And they did play out for a correction. It wasn't very big. It was more so a correction in time. We went sideways for a few months. But remember, that was coming fresh off the lows with tremendous amount of stimulus from the Fed. And so that was a correction again, and more so in time. But we did get a tradable correction in price. But bigger picture, we're below this primary trend line here on IWM, as we are on SPY and QQQ. And again, these divergences, shouldn't be ignored because they often will precede major trend reversals. Levels to watch. Well, let's look at the futures for that, because the 60-minute charts help us hone down our entries and exits. Here's the 60-minute charts of ES. We're going to get to NQ and RTY in a second. We had this wedge here breakdown, and that was a tradable correction right there. Hit that 41.31 support right there. Had a little RSI divergence that led to this pop. But most recently, here's a minor trend line. I just added this today. I updated this. We have a breakdown there. Nothing impulsive yet. What I'll be watching for, see this previous reaction high right here. If we fail that reaction high, that's probably going to bring us back into those same targets we had before on the way down. And being that we already checked that 41.31 target, if we roll over, that opens the door for that next target, 41.01. You can call that a sell signal if you want, and it certainly is. We're below, but that's a very minor trend line. This one had more significance. It was, over a longer period of time, more distinct reactions. But as I always say, you're going to need to see the Nasdaq roll over too. That's ES, the S&P 500 futures. There's NQ, and this talks about, shows that strength that we've had here. There's that trend line on the 60-minute chart, and tech has again, taken the lead as money has come out of financials and industrials and other areas. Does that continue? Hard to say, but what I can say is I think a break of this trend line right here would be a solid sell signal, high probability short entry. Minimum targets 14,066, then 13,737, and then this target zone down here from about 13,455 to 13,377 or so. Those are your swing targets, and potentially all the way down here to 12,934. And again, I always lay these out in advance. Markets move fast, and from these periods of extended low volatility and a slow grind up, usually comes those big drops. So you just have to have everything on your scratch pad, replicate your charts. But again, the takeaway is really not any clear or any sell signals really at all on NQ. That's the best minor trend line I can give you right there, but this one's more significant. And then last but not least, let's look at RTY, Russell 2000 small cap futures. That one did put in some divergence here. We were diverging. We had a divergent high right here recently on this 60-minute chart. We had a nice cleanup trend line, just like you had on ES and like you currently have on NQ. We had a breakdown, and it was a nice correction. So here's my levels right now. First support, and we hit it today. About 20. I have it at 22.9870 on RTY small cap futures. You can see why there's quite a few reactions there on that level. That's certainly a level worth watching, and we hit it today. But we broke this minor trend line, and it's pretty steep right there. So we broke that trend line. We had a swift move down, and this is the big picture here. We put in the divergent high recently right here that extended. It's simply an extension of this previous divergent high. So that divergence was never negated, and it certainly played out for a nice drop, but now we have an even bigger divergent high. So I think this has the potential to bring us back there, but what you want to see are those levels on ES and NQ that I showed you earlier. We need to see breakdowns there, and then of course on RTY, the small caps, you need to break that 22.9870-ish, pretty much today's lows, and that would open the door to the next target. That's 22.6150, and then 22.07 and a quarter right there. All right, now let's get to the good stuff. Lumber, obviously, I'm starting to go flip from bearish to bullish. I've talked about lumber for many months leading up to this high. Said it would be one of the best shorting ops coming up, and it most certainly was. Color that tool blue. Here we go. And I'm referring to this parabolic trendline break. So there was a high. And what I've done here, I'm going to spend more time on this chart than everything else. Time permitting, after this, I'm going to cover crude oil and Bitcoin and Ethereum. Those are really, that's where I've been trading. That's the most recent trade ideas I posted. I'm going to try to get something out to you at least, as often as I can. I never ever force a trade for the sake of just posting stuff on the site. If you think you're getting your money's worth from, if I post 5 posts a day, I don't see it that way, because if I don't post what stands out as attractive trading ops, everything else just gets lost in the noise. But again, I'll try to always do updates on the market and periodic updates on gold and commodities and things like that, but at least a couple times a week when possible, and I'll highlight the most attractive trading ops. So here is lumber. We're at lumber, crude next if I get to it. And the story on this was this parabolic trend line break right there. Crude has a history of parabolic trend lines and breaking down. This one right there, you dropped 46.5%. This one so far through, this is actually yesterday's lows. Keep that in mind when I go to these white charts here and it says $ lumber up top. Oh, you can't see that, can you? Nope, let me lower that. 1 second. There we go. That's a little better. Okay, so on the top upper left-hand corner, $lumber is lumber futures. That's a continuous contract, but this is from stockcharts.com. They give me end-of-day quotes. They have some advantages to these charts. I use a lot of charting programs, but I just want to point out it's end-of-day quotes. We're actually lower down here today, as I posted on the 60-minute chart, which I'm going to get to in a second. What I want to talk about is the reason why I'm looking now for a bounce, an imminent bounce, meaning it's going to happen soon, I believe. Whether it starts today, whether it starts next week or so. All right, so this is the target I've maintained for a while. We had that parabolic top. We dropped 55%. The last parabolic trendline break from the highs to the lows was a 45% drop to down here. We had a regular trendline break, and that was a 43%, 43.6. So we'll call that 44. Here is a parabolic trendline break. Let me get to the right measurement there. That was a 56% drop. Okay, why am I doing that? Common theme here. Here's the drops. I know there's a lot of lines on these charts. Some of these measurements are rallies, but I'm going to go through this again. Sell signal, bottom. Yep, bottom right there. 56% drop. Okay, so that was, let me just make it clear for you. I know I've been studying this chart all day, marking it up, so I know it might be a little harder to pick up online all these watching the video. But that's from here to here, and again there was a sell signal given, 56% drop. Then we had a trend line break here, and from top to bottom, lumber prices fell 44%. Parabolic trend line break followed by a 46.5. We're going to call that 47% drop. And then right here, parabolic trend line break, 55% drop. So where I'm going is you're looking at averages right at about 50%, and that's the nature of this beast. And that's what technical analysis, at least the way I see it's all about, recognizing chart patterns and historical moves on every security is different, and then trying to identify those to predict where things are going in the future. I mean, hence the name of the site, right side of the chart. I'm trying to, this is where current prices are, and what I'm focused on is not, I use, what's on the left of the chart, history, to try to predict where things are going. So where we're at, based on that, that is we're right in the sweet spot of what these corrections usually run, number one. And number two, we are oversold. I'm going to reference you down here to the RSI. Anything 30 or lower is considered oversold. So let's just talk about that. Okay, so we're pretty deeply oversold now. 24 and change on the RSI. I think you can see, no, 21.39 on the RSI right now, and that's again as of yesterday. Then the previous time we were oversold was right here. From that point, and I measured it for you, this little thing, it doesn't look like much, and I know it's hard to see in the video, and I can only zoom in so much. Let me try to do it for you. I know in the videos, especially if you're watching on a phone or a tablet or something, it's not very big, but let me see how I can zoom in here for you and scroll over a little bit and zoom in a little bit more and scroll over a little bit more. Okay, so there was that previous oversold reading right here, and scroll back there. Nope, I have to erase that. Gets a little tricky, this video editing software. Once I grab something and right on the screen, I can no longer scroll. But I just want to point out this bounce right here from, actually right there, from that low to that high, measured it for you, 20%. Okay, so I'm going somewhere with this. And what I'm doing right now is showing you past, similarities, if you will, on the chart. So that was 20%. Before that, we had an extended oversold period here, and that was right there. From high to low, actually that was the bottom, and I don't have this one measured, but I can tell you, and you can eyeball it, from about $250 up to 800 or so. That's measured well into the triple digits, and then I'd have to even go a lot higher from that low to this high, lumber rallied 542%. So again, that was if you bought in at that oversold level. And the thing about oversold, I always say this, oversold can become more oversold. Sometimes it's one and done. And typically if you step in, you hold long enough, you're usually going to be bailed out. However, we don't have firm evidence of a bottom now. So I'm going to just go back again, show you the previous ones. There was a one and done oversold, and if you stepped in there, it was right here. It was before the bottom came. It was right there, but you still got an 18% bounce before the next leg down. So where am I at now? We had 20%. We had, well, 500 and something, several 100% on this one. This one, even though it wasn't the bottom, was still good for an 18% bounce. This oversold reading was good for it's measured out from here to here is 56% bounce. Remember, within a downtrend, 56% bounce. You take that on lumber, you get 10% on lumber futures. You put thousands of dollars in your pocket. So if you've traded them, I don't have to tell you. Unfortunately, it's a pretty big contract, meaning one contract represents a sizable amount. And to the best of my knowledge, there are still not any mini futures out there like you have with the indexes and crude and natural gas and gold. But I'll get to wood and cut in a minute. Those are ETFs that tend to move with lumber. All right, so just one more here. There was a oversold during a bearish trend, and again, it was good for a 15.4% bounce. And then finally, right here, there was an oversold reading. It was a one and done. We didn't have the divergence. And from there, if you wrote it up to the high, and again, I'm just showing you what the scope of the moves are. You're not going to milk every penny of every run. That's 95%. All right, so that's the point I was trying to make is we have lumber falling to support right around my price target, which was about 80 initial price target, guys. Again, I think there's a good shot we may go lower. So I'm going to get to my bounce targets in a second here. But when we look at where we are right now, I had a line around that 820-ish level right there. It was good support. And we're a little lower today because this is an end-of-day chart through yesterday. I'm going to tell you, well, let me go to my other screen here. We're at 761 right now. We bottomed at 723 right after that post I put out earlier today. So we're at 761. I believe this is most likely a momentum-fueled overshoot, meaning there was a lot of downside velocity, and we may overshoot that support and then close back on it. If we do, that's going to be bullish. I want to see us get back above 850 soon. If not, there's quite a bit of support down here. There's a gap right here, a couple big gaps right there on lumber. There's a reaction high right here, about where we are now. I put another line here around 700, and then this is big support here, about 640 right there. Why? Because it goes back to this major reaction high right there, and then that reaction low right there. So to me, and we're down here now, remember. And if you're willing to give it some room, I think you can either scale in or take a position if you're going to go for these bounce targets that I'm talking about. And like any trade, it either works out or it doesn't. This is in free fall. I will fully acknowledge, and I stated in that post today, this is a catch a falling knife trade. You catch a falling knife, you can often get burned, lose a few fingers in the act, but if you get it right, again, it's all about risk reward. Set your stops and don't fall in love with it. And let's look at lumber futures real quick. Okay, so here's the 60-minute chart. This is the chart I posted today. It's updated. We were right about here. We took another jog down, so you could still get in cheaper than where I posted earlier today. Let me color up these tools. And so what I'm looking at is this divergence right here. See this PPO starting to curl up right here? If we can get a crossover, that will be what I call confirmed divergent or divergent low. Right now it's potential divergence. Why is it potential divergence? Well, because these are momentum indicators, and right now these momentum indicators such as the PPO and or at least the PPO is pointing lower. I like to see that bullish crossover there, and if we get a nice reversal today or this week, let's just say, the more we reverse, the more it's going to help show me that it was a momentum fueled overshoot of that support I just showed you on the daily. It's going to confirm this positive divergence, because if we go a lot lower, you put in a new low on the RSI, you don't have the divergence any longer. Right now, there it is. We have that divergence on the RSI. So I just want to see it confirmed with a bullish crossover soon. So ideally, see rally up here, and I'm going to measure it out for you. If you took lumber right now to the bottom of the T1 zone, that's almost 18%. To the top of T1 zone, that's 22%. To the bottom of the T2 zone, that's about 45, 46%, and to the top of the zone, about 55. Lots of ways to trade. You want the quick bounce. I would expect a reaction there is likely if this pans out, if the bottom is in now or close. If not, I just showed you where to look for the bottom on the daily chart. But I think we'll see something like this, and at least this. So you can either take profits there if we get there, T1 zone, or you can raise your stops. If we got there, you would at very least want to raise your stops to entry so you don't lose anything on the trade. And or you can ratchet them up. Just keep in mind, the tighter the stop, the greater the chance of being stopped out on a pullback if you think we're going to get this. There is a possibility that if this starts to pan out, especially when we get to T2, there may be more upside, and that could be the bottom of the correction in lumber. I would prefer, I'm going to loop back to that chart, I would like to see, you don't always get what you want, but I would really like to see positive divergence on the down here on the indicators. And if so, that would indicate, let's say we get a we get a thrust up right now and then another leg down, that would then play out. So that would mesh with, on this daily chart, this counter trend rally would mesh with that. And so, my plan, I'll probably be out on the bounce, one or both targets, depending on, how I trade it if I'm not stopped out before. And then, possibly recycle back in for a short, but probably not. Probably just wait for a move down to this level and see that divergence on the daily and then hold for next leg up. I know lumber prices are at multi-year, if not all-time highs. I'd have to go back. But, I'm still longer-term bullish on commodities. They got ahead of themselves. This was predicted in the charts, as was corrections in a lot of the other ones, which I plan to do some updates on this week. Grains, wheat, corn, soybean, all that other stuff. But right now I'm liking this one. And let me give you a couple alternatives for those of you that just spent 10 or more minutes listening to me but don't trade futures for various reasons. I get it. Wood and cut. I listed these as short trade ideas too, with once we got a breakdown on lumber futures, because they tend to move together. Remember, these are ETFs, wood and cut, two different companies that track timber and forestry companies. So they hold a basket of stocks, not lumber futures. However, because of that, that's their what these companies are doing, their prices are largely dependent, and they will track when you do and I've done it many times, put a long-term chart up and you'll see these guys track lumber futures. Not perfectly, but closely. And that's a potential target, and this meshes with maybe one more downside. I've laid out these targets. So there was our sell signal or breakdown. If you shorted wood, you're already good for about a 9-10% drop. It's bouncing back to resistance right here, so there's some work to be done on this one. We could get another leg down just like we could in lumber futures, and if we do, here's what's going to happen. We get rejected here at that $87. That was my first target before. It was taken out. We hit that next target, bounce back. This would be the next target, and this could set the stage for a bigger rally. But we do have oversold conditions for the first time in a long time right here. We didn't quite get there, but we were very close right there, and you can see what that would have done for you if you bought it. We were certainly oversold right there, and you can see what would have happened there. Here we were oversold, and we got a bounce. It was a tradable bounce, but then COVID hit, and again, you can put the odds in your favor. More often than not, when you buy, you want to be a buyer, or at the very least stop shorting when you get oversold. If you're holding this one, if you took that short and you're holding out for more, no problem. Just set your stops a little bit above this 87 level, and you might get that. All right, so there's wood and there's cut. Again, my preference right now is to play lumber futures. Cut might have a little downtrend line here. And cut hit my first and minimum target of 36.60. There was the breakdown of the trend line. Beautiful trend line off the lows back there. And if it goes lower, these are our potential targets right there. They are stocks, so if the stock market corrects, they're probably going to go down with it. And that may impact lumber, but again, right now I'm just focused short term on those 60-minute charts, and we'll see what happens from there. If this trade gets stopped out, I will stick on it and post updates if we get down to those next support levels on lumber futures. All right, now quick update on crude. Where are we at? We're at 24 and a half minutes on the video, so I'll do a quick update on crude. Nothing changed since last week. We continue to diverge here. We moved up. We had this 60-minute uptrend line right here. We had a breakdown, and we back tested it twice. The divergence stayed in place. And we're moving down, but not much. We really need to take out these recent lows. Let me give you a number there. And I still think it's going to happen. I'll show you why. I'll get to the crude chart in just a second, the long-term chart. There's the big number to me. You want to set a price alert or a sell stop order. Sell stop order is like it's an order when you don't own a position. Some brokers allow it, some might not. Where if you're not a full-time trader, not in front of the computer, you can set an order, a sell stop order, good to cancel, that says if you put your sell stop price at under 72, let's say 72.45, 72.42, and if it crosses below that, it will short. At least interactive brokers will do this for you. It'll trigger that sell short, that sell order. You don't own the shares, so it's going to put you short, a contract of crude, or you can use what is it, Q. I'm trying to draw a blank. There's a mini contract for crude. I think it's QC. If you don't want to trade the big contract right there, you can trade QC. I believe that's it. I'll have to. Oh no, maybe it's QM. Actually, yeah, that's it. QM is the mini contract for crude, and it tracks the same price levels. Targets are pretty aggressive. I'm going to add one more since I only had a single target I've been talking about for a while. I think we'd probably have some type of reaction around this area here, give or take. Around 70.50 or so, maybe down to 69.84, but I'm still looking for a pullback here to at least 66.61. Okay, now keep in mind, bigger picture, we just had that big drop in lumber futures. That's a monster trade, and that was again, it's just the nature of that beast. As crazy as lumber prices were just a few months ago, going parabolic and gaining 400 and almost 500% since the lows last year. The drop of 50% probably surprised a lot of people out there, but again, it was highlighted here time and time again. That's what lumber does. It's just the nature of that beast. It's just how that security trades. Now this is crude, so we look at, again, we go back in history. We're looking at a long-term chart here. This is a weekly chart. Weekly candles. Stock charts uses the symbol WTI, $WTIC for the continuous contract of crude futures, excuse me. Trying to get it all in quick. All right, so what do we see here? Let's just look at the simple stuff. Let's look at the RSI. Let's look at overbought and oversold conditions. You like to see these divergences, especially these divergences. You had a divergent high right here, and just to kind of put it in perspective for you, I'm not going to measure each and every one just for the sake of the video. You can do it on your own charting platform. That was a drop of 77%, and that happened from looks about June of 08 it peaked, and then it bottomed in January of 09. And again, it wasn't random. It was actually on the site here, short-term sell got us short right at the high there. We had a sell signal on the 60-minute chart, I believe it was, and we were able to milk a lot of that down. And then again, simple stuff, wash, rinse, repeat. Where did that bottom? What coincided with the bottom? Well, oversold. Overbought right here. What happened there? Big drop. And again, I'm not measuring them all out. This is a log scale. I can tell you they're big. They're well into the double digits. Very profitable to trade. Only a few months. This is swing trading. Then we look for, there was a oversold reading. There was a low. You could have got in long there and milked a good part of that run up. Oversold, oversold, oversold. 3 in a row. Tap, tap, tap. And it was positive divergence all along. Each one produced a very tradable rally. Again, we're talking double digits in percentage terms in relatively short order, just a matter of a few weeks usually, a couple months at most. And then finally, After each divergent low, the big one, the divergence continued to build, and then we finally put in that final divergent low, and that was it. And that marked a rally. I told you I wouldn't measure them all, but just to kind of put it in perspective, that was good for a rally of 183% in crude. All right, so this is kind of simple stuff, and I think most people, it's hard, and sometimes even for me to, stick with these long-term charts. But if you're trend trading, you can help hone down your entries on these by looking at these long-term trend line. Like there's a trend line break, but usually you're going to have a better, more optimal entry based on the 60-minute or daily charts. Again, we're looking at a weekly chart here, and we're going back a couple decades. But that's the point I wanted to make. Oversold, oversold, that's when you want to buy. Oversold, 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 you want to buy. Overbought, you get corrections, and then in this case, even better when you have overbought with divergences. That's what I like to see on tops. And that top, this one actually was about equal highs, but this one we definitely have divergence. Now that divergence can build. It doesn't have to. We already have divergence. But if we go anytime soon, if crude can make it up here, there's a big level right there. It's just a few points higher. That's big resistance right there. So crude is very close to that level. It may get there. And if it gets up there on this weekly chart, I'll probably start layering into short positions just for that alone. But I really like to see these 60-minute charts confirmed. So that's why I started with that chart of CL. I don't have a hard sell signal, but we get close enough. There's a potential trend line there. And then the takeaway from this is once we put in a divergent high, the downside move is typically measured in double digits, 10+% on the pullback. Last but not least, Bitcoin. We had nice entry here last week. Hit my long-term. That was the initial or final downside target. I think we may take another leg down. I told you that. I'm still leaning that way. Won't bet it hard, but in the near term, I gave you that first target, and that was hit last week. We've been consolidating around it. Let's zoom in a little bit, and I still have this T2. I think there's a decent chance we're going to head up here. Maybe even more. You have to respect these positive divergences. It could be the start of the next trend up, but right now, let's just look near term. If you didn't take profits there, well, if you didn't, you wouldn't have already, because we already, we popped above it. And if you're in it now, unless you're just impatient, you're holding out for T2. I think it looks good. Just maybe set a stop below Friday's low right there. We should hold above there, quote unquote, should. And then ETCG, Ethereum. My first target was the bottom of this range here, this zone about, what is that number, 2944. We hit it last Thursday, and we hit it again on Friday, and that gave you two opportunities to cash out there at that first target. And if you did, you were able to sidestep that give back of about 17% that we had on Friday from the highs dropping into lows, but they brought it right back up, so we're pushing against there. Usually, not always, but usually in a after we hit support and we bounce like this, if we were going to go lower right away, it's usually that first test. That's where all the sellers tend to step in. But right now, they're buying it. So I'll make it very simple. I still think there's a good chance we'll pop up here to that 30, about almost 35. We'll call it 34.94 level. It doesn't look like much on this chart. Let me do it this way. Now it does. You can see what it would be. So I think if we can pop solidly above the 29.44 level, or maybe even call it today's highs to be safe, you're talking another, and that would be my next target, and is my next target. That would be about another 18% run. So that's Ethereum. It could be more. You've seen this PPO starting to turn up here. It doesn't guarantee it'll cross, but it's starting to curl up down here. Again, that's where the money's been made. Even if you just took profits already and got out off that pullback to 22.44, that target, was good for a quick 30% gain in 3 days. That's swing trading. Get in, get out. If you're not comfortable, if you're a longer-term swing trader, trend trader, micromanage your positions accordingly. Set stops. Don't ever let a trade. Don't ever let a 30% profit completely get away from you. So, in other words, at bare minimum. If you're holding out for a much bigger run, you're willing to give it some room, I think stop should be moved up to at least break even, if not higher at this point. All right, we're going to wrap it up there, and this week I'll follow up with some other commodities such as grains and other things like that that have pulled back and pulled back to support. And of course, individual stocks I haven't given up on yet, but when you see this in the stock market, this sideways grind and the S&P and the small caps and all that, as you probably notice, a lot of my focus has been on alternative assets right now lately, such as commodities and things like Bitcoin and cryptos and stuff like that, because there's just frankly better charts involved in there, better opportunities. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.